What's up, guys? Vaccine rollout is now underway, and people in real estate are speculating on how it will hurt or help the market and what this means for you. 2020 was obviously a difficult year for many sectors in the economy, but not housing. So what changes might we expect in 2021? Stick around and I'll tell you exactly what I believe is likely to occur. What's up, tribe? I am Jonathan Smith here, and in today's brief, we're going to discuss vaccines, implications, and a few other more important narratives that I think are going to act as tailwinds for the real estate market as we head further into 2021. In 2020, we saw home prices rise more quickly than we have in a long time, while buyers wage wars trying to get into more spacious homes, all amidst working and schooling from home. It's been quite the challenge and quite the blessing for many. Median home prices were at $266,000 in January of 2020 and then rose to almost $312,000 by December. That's a rise of almost 15%. Record low rates made higher priced homes more affordable. And this reality is consistent with the 10X rule that we've talked a lot about this before on our channel. Namely, when you see interest rates drop 1%, you see a corresponding 10% increase in purchasing power, which usually drives prices up because people can simply afford to spend more money. The monthly payment decreases when the interest rate decreases. By the end of the year, we only had 2.7 months worth of inventory nationally, and that's despite a very busy year for builders. If you are local to the DC metro area, you even saw lower interest or lower inventory rather than just 2.7. It consistently has been low and still is low to this day. What was the biggest challenge for buyers? Well, it was pretty clear. Dealing with COVID restrictions, high prices, and lack of inventory, but they had great rates and wanted to take advantage of them, which I strongly suggest and encourage you to do even now. So what can we expect in 21? Well, I personally don't see any evidence that would lead me to conclude that the party is going to stop in 2021. Many people think that there is a bubble and that bubble is going to burst and we are going to see a crash similar to 2008. I don't personally see data that would lead me to conclude that. Instead, what I think will happen is we'll still have the party. It's just going to be a little bit more tamed. Most experts believe that we will settle somewhere between where we were before COVID and where we were in the middle of COVID. Translation, well, really, it's just a modest but still aggressive appreciation, home appreciation that is, of approximately 5%, maybe even 6%. On the upside for buyers, well, they will likely get what they've been clamoring for, more homes for sale. Why? Well, sellers have been somewhat reluctant to allow people to come in their homes, 50 to 60 strangers at a time, not knowing what's really going on with COVID. And so they haven't put their homes on the market. Now, once the vaccines prove effective, those concerns are likely to be minimized, and that should increase the inventory. What else might help the buyers? Well, there is going to be a $15,000 tax credit for first-time home buyers. That is going to really apply additional pressure on the inventory in the housing market that we have. So it will make it that much more attractive to first-time home buyers. We will see what the inventory allows and whether we will still see those same wars being waged as one buyer tries to beat out the other. When will this happen? When will the increased inventory take place? Well, it seems to me that this is likely going to happen gradually as people become more confident that COVID is under control and the aggressive rollout of vaccines under the Biden administration has been completed. Some people will feel comfortable listing their homes during the first half of 2021, while others will want to wait until the vaccines are more widely distributed, which means they'll likely put their homes on the market in the second half of the year. My point of view, well, it's that we're going to see more inventory in the second half of the year, the last 2 quarters. So if you're considering selling and you're looking for that competitive advantage, then it may be prudent to look to sell your home in the first half of the year just simply because you won't have as much competition. On the building frontier, the new build frontier that is, Builders are also going to continue building. The growth in the single family home new builds is predicted to increase the new homes available by 1 million single family homes and townhomes by the end of 2021. How will all that extra inventory affect prices? I don't personally see it affecting it much at all. Most experts believe demand will remain strong, which will keep prices high, but most don't expect prices to raise as much or rise as much as they did last year. Sorry guys, I can't talk today. They don't expect prices to rise as much as they did last year. What about interest rates? Well, they've clearly been at historic lows. We know that. The average 30-year fix went to 2.72% in late December, according to Freddie Mac, and even lower in early January. But as the economy improves, rates will likely creep higher. Realtor.com is guessing that they'll move back up into the 3% range. Higher rates typically keep a lid on home prices. That could help slow the price of growth. It might even knock a few buyers out of the market, which could help decrease the competition. However, the Fed has been clear in saying that they don't see them raising interest rates until 2023 or 2024. So it's going to be a TBD here on what happens with rates, because we continue to hear, well, different things. Sometimes they conflict, other times they're just a bit different. But a 3% mortgage rate is still really good and pretty desirable, so there probably won't be too much of a downside. In fact, a video that I'm going to be producing in a short while is actually going to make the claim, and I think persuasively so, that it is cheaper to buy a home now than it was 2 years before your boy here was born in 1976. Could that be true? Well, stick around on the channel and wait for the next video, because I believe it is, and I'm going to support that with cold, hard data.
Wedding dress. Just the facts, ma'am.
So a 3% mortgage rate is still really good. And so there probably won't be too much of a downside. But one big question that many people are asking is this: will people return to the big cities from their comfortable pandemic home in the suburbs? The virtualization of work has essentially allowed people to move to more affordable areas with larger homes, but they also moved away because the pandemic kept them from enjoying all the things that they like about urban living. So when restaurants reopen and the nightlife and cultural events return, will people move back? Well, many experts believe they will, at least to some extent, especially among young folks. Realtor.com says the city is not just a place to work, it's a place to socialize, it's a place to meet other people, and city prices will also be lower, which could lure people back in. New York appraiser Jonathan Miller told Realtor.com recently, there's a dramatic reset and affordability is starting to trigger interest from younger renters who are priced or have been priced out of the market and not able to afford it. He says rent in Manhattan went down 22% year over year. In San Francisco, they were down 27% by the end of 2020. And while we may see more younger people returning to the cities, families that have really recently migrated to the suburbs may want to stay where they are. It used to be that white-collar workers needed to be within commuting distance of the big cities. Well, the pandemic has changed that. Companies have now allowed much of their workforce to work remotely, and while the percentage of remote workers could change and adjust to a post-pandemic world, remote work isn't really expected to go away. Families are also living more comfortably in bigger homes with larger yards and better school systems. They may ask themselves the key question: why would anyone want to give that up? Well, chief economist for the National Association of Realtors, Lauren Young, says single-family homes in the suburbs will clearly be favored over the condos in downtown and city centers. He feels that it won't just be demand for suburbs that we will be seeing, but rather distant suburbs that could be one of the more exciting movements that we will see this year. What other movements will we see this year? Well, my point of view is that we're going to see many more, and some of these that we haven't seen. And that's what this channel is dedicated to delivering to you every week. It's information and news that's all intended to help you multiply and protect your wealth in real estate. That's all for the brief today, folks. I hope you have a great weekend. As always, thanks for watching. If you enjoyed this video or found any value whatsoever, just do me a solid, hit the like button, hit subscribe, share this with somebody who you think may derive value from it, and always post me a comment below. Let me know what you see or what you think is going to happen in 2021 and some trends that we might need to look out for. Would love to connect with you there. Thanks for watching. Have a great weekend. I'll talk to you next week.